Your network is your net worth. We had a really great aligned view as to where we see digital assets going, not just because we know tokens are going to appreciate. Everyone that is bullish on crypto, you can participate in other sectors of crypto market to actually accumulate more Bitcoin. And that's strategic entry and exits, strategic swing trades, and we also do algorithmic trading.
Everybody's going to tell you, I can get you yield on Bitcoin. Nobody is going to be able to do this much yield with this much security. It would be very difficult for anybody else to be able to offer this kind of return and security combination together. And that's what got me so excited about TRU Capital initially. We're going to stay long on digital assets and accumulate more Bitcoin, much more than just a buy and hold.
Hey, welcome back. And in this episode, we're going to be covering a bit more about TRU Capital, which is our digital asset hedge fund. Really, what is unique about it? What differentiates us from other ways to get exposure to digital assets in the marketplace currently? That way you have a bit more of an understanding of what it is that we do, where we're coming from, and really, if this is something that you're interested in, you can always reach out to us by going to truecapital.fund, or you can click a link into the description. So with that said, I want to kind of give the backdrop as to how it was actually created and then how we merged really together and how we actually got brought together, because it's a very interesting story, and really your network is your net worth, right? And so it was a really cool story. So back in 2020, my partners and I went deeper into digital assets. And because I have a pretty big personal brand around digital assets in my community and my friends' family, they kept asking me, how to get involved, how to get involved, how to get involved. And after enough times and enough emails that I was sent and stuff, I said, you know what, I got to create something because I keep getting asked to do this. And so my partner had the same sentiment, Wences, which is our third partner in the fund. And ultimately, we got started down this rabbit hole of how to build a fund, the regulations, requirements, and that kind of stuff in 2022, which, if you guys remember, in 2022, FTX blew up. And so getting into crypto at that time, from saying that you want to go capital raise and you want to do this, was not the best timing at all. But we decided to go down that rabbit hole of figuring out what the current administration at the time wanted, what we needed to do, and how we needed to file things and get things set up. And so after about a year and a half on that journey, that's when one of my good friends and our good friends, Christian, had introduced us. And you were working at BlackRock at the time, and I'm sure we can talk more about that, of what your journey was to come to the fund. But we just hit it off. We had a really great aligned view as to where we see digital assets going, not just because we know tokens are going to appreciate. Everyone that is bullish on crypto thinks that, but which sectors are most important, how to take the signal from the noise, and really how to craft a unique strategy in doing so, because there's different approaches to digital assets overall. And so we came together about a year ago, and flash forward to now, we're speaking on stages together, we're going on panels together, we're going to these different events, even hosting events, talking to accredited investors and high net worth individuals. And that's how, and where we're currently at, TRU Capital came together and where it's going. And so I would love to hear your perspective from your side, because I know you came from BlackRock and had your own experience in crypto prior to TRU Capital.
Sure. Yeah. So at the time that this conversation all kicked off, for me, like you said, I was working as a vice president on the Aladdin platform at BlackRock, and was working closely with the digital assets team. I had helped out on some of the work that we'd done on the integration with Coinbase and Aladdin, which was a great way to get more in depth in the internals of digital assets at BlackRock, but also start building bridges externally as well, and developing those relationships and expertise. At the same time, I was also writing scripts for one of the largest YouTube channels on digital assets, which is now called Discover Crypto. But I had been doing that for a couple of years, and the focus for me there was education for myself and for the audience. So I would end every video with saying, like, hey, this is just a primer. Do your own research, get educated, pay attention. This is not going away. It's going to keep growing. And so I was looking at the time for an opportunity to go more full-time crypto. And I wanted to do so in a way that made sense for my career progression and development, right? I didn't want to go to be, just another developer at some, meme coin or like L1 launching with no money. I wanted to find a way to kind of parlay my experience and background on Wall Street into the digital asset space in a more meaningful way, and then leverage a lot of that deep crypto knowledge that I had developed over many years of so intimately studying digital assets. The distinctive thing about this opportunity and it took us a long time of discussing and figuring out, refining what this fund offering was going to be. The distinctive thing about it for me that was so important, was the every single layer of it, we were able to figure out, align, bring together, and then solidify institutional grade quality at every aspect of it. So whatever it's like compliance or custody solution, whatever it might be, the institutional grade proprietary trading algorithms we have that backstop the fund, all of these pieces were really important to me because I didn't want to just be another Me Too crypto fund, right? I wanted it to be a distinctive offering. The key piece for me that allowed us to do that, I wanted to be able to say that we are long only digital assets, but prevent the temptation or risk of getting caught up in a lot of other pitfalls or falling prey to other traps and predators that other people who try to get into the digital asset space fall into. What I mean by that is that when you are trying to stay long on digital assets, it is not difficult to get a substantial return for your limited partners during a bull run. Anybody can turn their brain off. It's like I call it everybody's a genius season. It doesn't really matter what you're allocated to. You're going to have returns that make you look like you're Warren Buffett, right? So um, that is not what I was interested in because anybody can do that. But during times of a bear market or what I call a crab market, where the price of Bitcoin and most digital assets will just sort of chop sideways for long periods of time, those are market opportunities that I wanted to be able to capitalize on and still get a respectable, sizable, attractive return for our investors without taking a lot of the risks that a lot of other people have to take in order to get that in the digital asset space. People will go short on Bitcoin, which I think is reckless. They'll do things like take 50x leverage long trades on things and get like way out of position. That's how Celsius lost their shirt, by the way, just doing huge leverage trades or chasing huge returns in DeFi, which is another way they lost a lot of money in Badger DAO and other things like this. So there are a lot of things, like Wonderland Finance is always what comes to mind for me. That was a project on Avalanche that was offering 18,000% APY at one point, and obviously that didn't work out well, right? Like the guy had to flee the country. So I think that my intention with this fund was to say like, hey, I want to be able to offer institutional quality at every stack, every level of the fund, be able to say we're going to stay long on digital assets and accumulate more Bitcoin, much more than just a buy and hold, right? But then also say we're not going to get you into things that are going to have high risk and be reckless with the money and make sure we're protecting investor capital so we can stay partnered for the long term. And that was what was a big driver for me.
For sure, yeah. So let's talk about kind of the strategies that we have because there's four main components and covered a good bunch of them. But really, the first one that everyone wants to do, especially with digital assets now, is accumulate more Bitcoin. Well, how are you going to accumulate more Bitcoin, right? And that's one main component. You can just continue to DCA in, which is great, or you can participate in other sectors of the crypto market to actually accumulate more Bitcoin. And that's strategic entry and exits, strategic swing trades, and we also do algorithmic trading. And so by combining strategic long-term allocations with swing trades and algorithmic tech, we're hitting those four main areas that people usually go to a specific fund for. There are funds specifically made for buying and holding Bitcoin. And it's like, well, that's not really a value add. Anyone can draft up some paperwork and do that. There are trading houses, but they use a lot of leverage a lot of times. Like you said, a lot of companies go through some restructurings or they lose their shirt because they're trying to chase that yield, or they're trying to chase that next trend, etc. Obviously, coming from BlackRock, you know how to underwrite these projects, and I've been in about 3 crypto cycles already, so I've learned a lot just by participating in those markets. And we both came to the same conclusion where it's like, hey, there are seasons where the algorithms have to do their thing. There are seasons where the long-term spot positions are going to do, very, very well because we were there early before that mass capital showed up. And then there are times where the swing trades are just going to make sense. And so let's just talk about the last sort of 6 months that, we participated in the market. The trades that I've been able to pull off for the fund and what we've been able to do since January have been mostly double digit, if not triple digit swing trades. And they are simple swing trades, but they're strategic. If you've been in these markets, you know what's going on. It's very easy to have those types of returns. And that's where navigating this market with professionals is what really matters because, yeah, you can make a swing trade with a bunch of leverage and get lucky, but to do so time and time and time and time again, there's obviously a pattern of good performance there. And so
Absolutely.
it really comes down to people that have been there, that have done it, have also lost money in their personal accounts prior, because it's not just straight up all the time, right? If you buy good spot positions, then yeah, you may be up all the time because you bought it at a penny and now it's worth $10. But being able to navigate that volatility is really important. And so, between the swing trades that we've done, between the algorithms that we've done or that we've made money with, and between spot allocations, a lot of those positions are up a lot of those positions are up over 100%, 200%, 300%. Even one of the algos is up over 3,400% from deploying it over a course of 4 years. And so it's using strategy to approach these markets rather than chasing yield and chasing shitcoins.
Yeah, exactly. Yeah, and I think, to go back to something you touched on before, everybody is going to offer some kind of yield on Bitcoin, right? And like that's something that's been really prominent in the digital asset space. But now, as banks are going to be allowed to, do a lot of financial activity with digital assets, they're going to offer yield on Bitcoin as well. But you're taking a risk when you're going to do that. And one year at the Bitcoin conference, I went around to every single project at the Bitcoin conference and just asked them, what do you do if you're custodying my Bitcoin? Where do you hold it? Who do you actually have it custodying? Is it just you with a multi-sig, or is it with a custody provider? How are you getting yield? Who are you lending that to? What are the security risk with that? And just like trying to, and through like, kid you not, over 100 different conversations over the course of a weekend, got a really good understanding of the risks in the market for that, and that yield was not worth it, and that there were way more attack vectors than I could even imagine. And so, but getting outperformance on a buy and hold on Bitcoin is important. As this asset class matures, you're going to see much more stability in the price in terms of, well, like historic volatility, right? So like we're not going to see this jump from 2K to 20K type of thing anymore. It's not going to go from 100 to 20 million overnight. There's going to be longer periods of this crab market chop. So like this last 6 months, right? Since it's Trump's inauguration, it made a new all-time high, but since January, Bitcoin has been largely ranging between, like 115 and, high 80s. It's a big range it's been swinging between, but it hasn't been like jumping huge amounts. So if you've just been buy and hold on Bitcoin, you're doing fine. But the point of the algorithms is to say like, okay, there's going to be long periods of sustained sideways price action. How can we use this proprietary institutional grade technology to accumulate a much bigger bag? And like you said, like historical performance is 3,400% APR on the algorithms that are trading during these kinds of markets. That is a huge advantage, and it's a competitive advantage that other people are not going to be able to offer in the market. That's a big differentiator, because the risk of Bitcoin is not being allocated. However, a lot of that time, your money's just going to be kind of put to sleep while Bitcoin ranges, waiting for the next big leg up. As those periods of time get longer and longer, as it matures and the capital stabilizes, those algorithms are going to become even more important for outperformance. And I think that's going to only make our fund even more attractive to investors who want to stay long and not take the risk of having to get out of their Bitcoin position. That's a huge risk, I think, at this point. So that's a huge driver of demand and value for our fund to me.
And one of those points that's really important is that algorithmic tech has to be built for that industry. So I've been trading with algorithms for maybe 4 years now. Largely, when I first started, it was crypto native, and then it went into forex. Then it's gone into futures, and then in crypto as well. So I've seen algos in many different markets, and there are certain controls that you want to have over algorithmic tech, number one. But usually algorithms are pitched in today's world as a set it and forget it tool. You never look at it. It works in all markets. And that's just simply not true. So when John's talking about that we have algos that work in ranging markets, that's just one of our pieces of technology. We have other pieces of technology that work in different types of markets. And so understanding the tech and the tool and what it's used for and what success looks like with the tool matters. And so there are, other technologies that I use in my other, portfolios and stuff that are designed for different markets. We even have some that we've taken a look at in the futures markets. They're designed architecturally differently than crypto algorithms, because the unique thing about crypto is that liquidity can move from exchange to exchange. So it's not like you log into Charles Schwab or you log in TD Ameritrade where all this, excess liquidity is happening, this exchange of hands on stocks, and all these different trades are occurring, and you plug in an equities algo, you're only participating in a few different main like brokerages or main markets. There's not much competition. But when you have Binance, which is completely overseas, and then you have liquidity on Coinbase, then you have liquidity with Bitstamp, you have liquidity over here. Each of those exchanges have different volumes and different flows. So it's not just, okay, I identify a pattern. It's, okay, where can this pattern execute given the liquidity flows with different tokens and with different markets? The other thing that we get asked all the time too around, trading with algos is, well, do we have to put that liquidity on the exchange? So if we go to deposit, let's say $1 million, do we have to put that into the exchange for the algo to trade, or how does that work? Well, there's a few ways to change the parameters of the amount that is trading every single purchase and sell. But what's unique about what we have with the infrastructure is that we can put our long-term holdings and our main deposits into custody and have the liquidity access because it directly integrates with the exchange. So the main actual capital may not even be exposed and it's secure. And that's what was really interesting as we, decided to really bring this together was, how do we protect these attack vectors? How do we make sure that there's not one point of failure? How do we make sure that there's actually strategy with protection? Because sometimes there's strategy, but they don't think of the second, third, fourth order implications around that. And so that's something that we really take to heart. And we're more than happy to share with you if you guys decide to book a call with us, or it's even on our website, some of our algorithmic trades and our manual trades. You could see the performance. You could see even trade logs and stuff. We're more than happy to share that with you guys. This was real algorithmic trading, not just a back test and, phony story.
And I want to just, highlight again, the security element of this is paramount. And I think that it doesn't matter what kind of returns you're getting. If you're taking insane risks or trusting other people with your assets to do it, it's not a good idea. The security solution that we have is BitGo. They have the longest track record of institutional grade custody solution in crypto without any security faults, risks, or issues of any kind. I think they've been in operation for over 13 years with a perfect track record. The Trump family, with their World Liberty Financial, is launching a stable coin, and they're using Bitcoin as their custody solution as well. So it's literally the custodian solution for TRU Capital is literally good enough for a president. So I think that was the bar that we had to clear for this, right? When we were evaluating at BlackRock different custody solution providers for IBIT, there were only 3 that we were evaluating, and BitGo was one of them. So it's absolutely the best custody security solution available on the market, and that is indispensable to me. And that was, look, I don't care what your algorithm does. If I don't have my assets secure while it's running, I'm not interested, right? Like, because I've seen too many of these things blow up, and there's too many risks in trusting too many other players in the market to hold and custody your assets. So I didn't want to have to do that. The way we were able to organize this infrastructure to be able to still have this enormous outperformance without compromising at all, like even an inch on security, was paramount to me. And I think that's, like, again, another thing about this fund that differentiates it from any other offering you're going to find on the market. Everybody's going to tell you, I can get you yield on Bitcoin. Nobody is going to be able to do this much yield with this much security. It's just, it would be very difficult for anybody else to be able to offer this kind of return and security combination together.
Yeah, for sure. And even to not just highlight only the returns, because the whole point of a fund is obviously returns and perform the markets. The research that we do on even allocating to projects is very important too, because we have the algorithmic trading side down and the security side down. Great. But what do we do when it's not times to run? What do we do when it's not the time to run certain trading strategies or certain algos because current market conditions are not favorable to that? Well, that's where our swing trades come in, and that's where the research on our projects comes in. And so let's talk about more about the research and stuff that we do, because we have price tag targets, entries and exits on mostly every project when we look to go make an allocation. So let's talk about the research that we do and how we understand the space very well.
Yeah, so I think I follow digital assets in the way that a lot of people follow sports, I think. I get a lot of energy and enthusiasm out of understanding how this asset class is evolving, who's building what, what's their value proposition, who's their competition, who are their founders, what is their differentiating, what are the differentiating or distinguishing features of this project versus other ones? Is it new to the market? Are there other players in the market that they're trying to compete with or displace? And then, just thinking about how these things play out over time. Who are they competing for? Are they trying to get retail users? Are they trying to get institutional adoption? What is the likelihood that they are able to successfully do either one of those? And over what time horizon, right? So I think there's a lot to be said for just paying attention. And I think you can start with whatever entry point you want. But for me, I started with all of this stuff by just reading the white papers and then reading the dossiers and bios of the founders, understanding the roadmaps, and then just evolving and following it as it progresses. Like I talked to like Polkadot is going through they did something called Polkadot 2.0 and now they're doing something called Jam, which is like Polkadot 3.0. And Polkadot, for those who don't know, was founded by Gavin Wood, who is the chief technical architect initially of Ethereum. And he's developed this layer zero architecture and is evolving that now with Jam. But I talked to the current chief technical officer of Polkadot for an hour and a half about Jam at a conference and just like grilled him in incredible detail about this stuff. I don't think he was prepared for this, but like I took a lot of notes and I understand now how this works and I understand what's the value proposition there. Is that going to have lasting market adoption? This is very wonky stuff, but the other thing about this too is that there's a lot of fundamental analysis that you can do. A lot of people think that you can only do fundamental analysis on traditional companies that have like, earnings and EBITDA and all this other stuff. But there is a lot of fundamental analysis you can do on a blockchain ecosystem. However, you have to also know that a lot of those things can be spoofed or faked or inflated, and you have to be able to get into the on-chain data and assess whether or not that's happening and to what degree and do you care and like really understand in extreme detail what's really going on at these projects and differentiate the signal from the noise and then say like, okay, well, do I want to try to capture the upside from pump.fund's summer of fun, right? Or do I want to try to get allocated to where trillions of dollars of capital from institutional players is going to go when it moves into the digital asset space and get allocated that way. So I think, as far as the research go, I spend hours on it every day. I do it enthusiastically and energetically. I know a lot of the founders or the team members from a lot of these major projects, and I just try to stay up with what's going on because it helps to just know and see where things are going to go. And then it's really much easier to anticipate what's going to be successful and to what degree and when, because if you just kind of are seeing what's being moved around, where the chess pieces are going on the board, it gets to be a little bit less difficult to anticipate that if you're just following what's going on every day.
For sure. And that's where I think not only we stand out, but because we're professional about it, there's a different level of trust because there's a lot of crypto bros or people that take on a crazy risk once they have a little piece of information or a little bit of knowledge about a subject that sort of makes that piece of information have way more risk than upside because of the way that they're approaching it. And that's what I appreciate most about kind of how we work together on this stuff is there a level of professionalism. There's a non-hypey way that we're approaching a lot of these allocations because you're grilling. A lot of the times these founders can go very technical, can go very deep on these white papers and stuff. And so, a lot of times family offices and investors, probably like yourself, just aren't equipped. One, because you probably don't even want to talk that type of language of the technicalities and where it fits inside the ecosystem. But two, even if you did, it evolves so fast that a lot of times you're just not equipped with the information because it's just not something that people have dedicated their time to. They don't have the analysts. They don't have the time to even learn that subject at the pace that you have. One, because you were working at BlackRock, but two, you're digital asset native. You're not converting your mindset from EBITDA and shares and equity. And you're not converting from that, even though there's some similarities. It's just a level of professionalism, and I think that that's what the industry is needing now more than ever: is professionalism, professional approach, personality, the way to represent cryptocurrency and projects, the way to represent valuations, and obviously allocations, and being able to craft a nice portfolio.
Yeah, absolutely. And I think that there's a growing appetite for that professionalism, right? People are starting to see and understand the value of digital assets, but they are looking for somebody that they can trust and respect who can speak English to them and who's not going to come out in a wizard costume and tell them to buy, the next meme coin, right? So like I think that there is an appetite for that in the market. And it's been really encouraging to me. Like I've been in New York recently at a lot of crypto and specifically conferences around tokenization, where the people in the room have all been from Wall Street, and there's been almost no crypto native people at all. And they're all talking about digital assets. They're all talking about tokenization. So they are now crypto natives from the Wall Street institutions. And that change in tenor, in professionalism, and just in the general attitude about the asset class has been really encouraging to see. I think it's going to continue. But as I've said, like the research portion of this is something that I think is easy to kind of like brush off or just be like, yeah, whatever, I'll just get an allocation. But I really do think that there is an enormous amount of just free alpha that comes from rolling up your sleeves, reading the white paper, asking questions, going on Twitter, tweeting at somebody and like getting some questions answered, right? So like it's really a unique space where they're not trying to hide the alpha or hide the football in some of these things. They're actually very forthcoming with, here's how we think we're adding value. Here's our strategy. Here's our architecture. And you can go and have discussions with the people who are creating these things and building these projects, and they'll speak with you with a degree of respectfulness and intellectual honesty and authenticity and clarity that really can help you gain a deeper understanding. And that is a big differentiator, I think, in how you participate in the market and making allocations that are more oriented towards long-term success and value accrual and creation, as opposed to just chasing momentary hype or flashes in the pan or whatever's catching the headlines that week.
For sure. And that's what we're here for at the end of the day. Like you said, take someone to actually go do that research, go talk to the founders, go talk and grill them on where their value props really lie. And again, I think that's where we not only, have great research, but we do that second and third order, fourth order of thinking after those interviews and those questions with those people. And we ask pretty darn good questions.
Yeah, and so bringing all of these different pieces together, like I said at the beginning, this is what I think made TRU Capital so appealing to me and why I wanted to leave BlackRock and try to, participate in this fund and make it as successful as I could, as opposed to trying to like, work my way further internally into digital assets or go in a different direction or go to like just some full crypto native project, right? I think that this intersection of Wall Street and digital assets is where I want to be. I don't want to be completely in one or the other, but the ability to put all these pieces together with our general partners and the way that we've been able to organize the structure of the fund, it's a really unique and I think well differentiated offering in the marketplace, and that's what's so exciting to me because it's not easy to put all these things together by any means, and any individual one piece of them by itself would be very attractive to any investor. But putting them all together, I think, is a really unique and powerful package, and that's what got me so excited about TRU Capital initially, and why I'm still so excited about it.
Yeah, absolutely. And so am I. I mean, if we've been building it for quite some time. It's been a great vision that we've had, and it's obviously great that we're partners on it as well. And as we continue to grow, we look to continue to expand the firm. So, with that said, guys, we hope that this gives you a little bit of insight. There's much more behind the scenes as well with all of this, but hopefully it gives you a little bit of a behind the current look at what it's all about here at TRU Capital, where our intentions lie, where our vision lies for digital assets. And we'd love to invite you to come on board and obviously ask questions by just hitting the link, booking a call with us, and we'll see you on the next episode.